we're trying to have our money do a job now. So it's taking the gloves off. What do we want to do to give you the most successful, stress-free retirement? And again, we use stocks, but they may not be the main driver of the portfolio. We may be using other strategies. So the fact is that it's just a different paradigm. We're seeing your money through a different lens. Your money now has to go to work for you. How do we do that in the safest manner? And are we going to use stocks? We have a great dividend portfolio we used for many years that pays a great income, but you're going to have stock market volatility. The great part about a good dividend portfolio, though, is that we're not in our planning, we don't spend the capital, right? It's kind of like rental income. We're living off the dividend income, the interest income, and so we're not selling, but that's not guaranteed. So it's nice to have some principal protected investments with some risk investments, but the theme is always I want to have cash flow.
Welcome to the Retirement Architect with David Reyes. Our program is designed to not only provide insight, but to educate and give you the tools you need to design and build a rock-solid retirement.
Here with the Retirement Architect, David Reyes of Reyes Financial Architecture. Going to be talking about an important topic today, the difference and the distinction between an investment plan, an investment allocation, and an income plan, a blueprint for retirement, and the benefits that having that written retirement income can provide us throughout retirement. Even in difficult and turbulent economic markets, David, having that written retirement income plan in place can provide us for confidence and quality of life.
Yeah. So, I mean, the first thing you have to do is you have to unteach what clients have learned about how to invest money. Again, we talk about this all the time, the boomer portfolio, the 60-40 portfolio. Right now, a 60-40 portfolio of stocks and bonds is down 19% year to date. The cash flow being produced from that portfolio is 1.75%. Okay. The average retiree needs about 5% cash flow because of taxes, inflation at a minimum, right? So there's a little problem here. Right, you can only safely withdraw from basically this boomer portfolio about 2% a year, right? And so if you had $1 million, it's $20,000 a year. You didn't save your whole life. They'll only be able to take out $20,000 per $1 million you have. So it's challenging always, but for 27 years, that's all we focused on is retirement income planning. Because I say retirement planning is a big topic. You and I know that the retirement income planning is it's like brain surgery, right? It's going from a GP to a brain surgeon because it's very precise in what we need to do. It takes a lot of experience. And one of the things we tell clients about, I've learned over time is that you've heard me use the term permission to retire, right? Part of being able to help clients give them permission to retire with their own money is the experience of going through that, having hundreds of clients retired. And so today is more challenging than ever. But the one thing we're going to do first, it's really simple, Peter. What we're going to do first is how much money are you making today? Right. One of the first questions I ask is, what's your net paycheck? Right. Not how much do you make? What do you earn? What goes into your automatic deposit in your paycheck? We're going to start with that. Real basic. So, David, it's $10,000 a month. Well, guess what? That's where we're going to start. I want to start high, right? I want to say, okay, here's what we want to replace 100% of your income. Believe it or not, Peter, I would say 80% of our clients are going to retire with at least as much as they're making in retirement or more. And they're shocked. So that's where that permission comes in, because most people are afraid to spend their own money, right? So kind of once you got to take that fear away, it's kind of fun. It's the most enjoyable part of my job is watching that kind of frown turn upside down. That's concern. Now, wow, David, I can spend $10,000 a month. Yeah, we can safely. So it all starts with the current cash flow that they have. And then how do we get to that income, if possible, in the safest manner possible?
David, I am 42, and right now my income plan is showing up to work, setting my alarm clock, putting in my sweat equity. It's what's allowed me to look at turbulent economic times, the Great Recession of 2007, 2008, and COVID, and what we're currently going through as opportunities rather than catastrophes. But in retirement, when we're living off of our investments, we really don't have that time or luxury. I mean, right now, I would do about anything not to touch my investments in my retirement accounts. But when we go into retirement, how do we structure a plan to reflect that fundamental transition and remain confident even through difficult markets?
Yeah, that's a great question. I mean, you the nail on the head. That's the question every retiree asks, and that's why they're fearful of spending their capital, because it's that fearful mentality or that scarcity mentality, right? If I spend $1, I lost $1. right? So what we have to do first is go back to what I originally said. We have to create that retirement income plan first. What are they currently, what are their current income? What's their current expenses? What is that going to look like in retirement? And then we're going to start from the safest asset class as possible, meaning how much guaranteed income can I get first? We call it the private pension, right? How do I create guaranteed lifetime income, right? The only guarantees you're going to get in life is FDI insured accounts, which are really not investments. US Treasury bonds, which we talked about, are actually kind of attractive now in the 4% range, and good old fashioned income annuities, right? So we'll use those and we let the client drive the investment decision because we use everything from stocks to bonds to real estate to annuities. So we're agnostic about it. But starting off with here's the most conservative strategy tool, and how much do we want of that? Some clients there say, David, I want no risk. I want to have all my stuff guaranteed. Some clients will, David, okay, I want to have half my money in guarantees, the other half in the market. It's fine as long as we can solve for cash flow safely, and we all agree with that. Because if we get involved, we're going to help to optimize that. What's that going to look like? So the only time I always say with clients where we have disagreements, quite honestly, is when they're too aggressive, right? I'm a conservative guy. I hate losing money, right? Now we can't guarantee that unless we're in, principal protected annuities, right? Or in US Treasury bonds or in FDIC insured accounts. But the fact is we want to start with that as kind of step one, because sometimes that's where it starts and ends. For most clients, they're going to want to have more diverse, which we are as a firm. We're more in line with, we have dividend portfolios, real estate, using fixed index annuities with guaranteed income riders. But it just depends. I got a client right now that's selling a business, an $8 million business, and he's most likely going to put all his money in a guaranteed annuity. It's his 35 years of life's work. He doesn't want to lose a dollar. Now that's his choice, right? I wouldn't structure it that way, but it doesn't matter. It's not my money. He's just happy that we have that alternative to be able to put that kind of capital in and not have principal risk.
David, can you compare the experience of an investor that may have the traditional Wall Street asset allocation model versus one that has that retirement blueprint as we experience the ups and downs that we will most likely go through over the decades of retirement?
Well, it's night and day. I mean, the fact is when you go from what's considered what you're talking about as an asset allocator, somebody who says you need to be diversified, I call it diversification. You can own 10,000 stocks. When the stock market goes down 50%, guess what? You're down 50%, right, Peter? So, we're trying to have our money do a job now. So it's taking the gloves off. What do we want to do to give you the most successful, stress-free retirement? And again, we use stocks, but they may not be the main driver of the portfolio. We may be using other strategies. So the fact is that it's just a different paradigm. We're seeing your money through a different lens. Your money now has to go to work for you. How do we do that in the safest manner? And are we going to use stocks? We have a great dividend portfolio we use for many years that pays a great income, but you're going to have stock market volatility. The great part about a good dividend portfolio, though, is that we're not in our planning, we don't spend the capital, right? It's kind of like rental income. We're living off the dividend income, the interest income, and so we're not selling, but that's not guaranteed. So it's nice to have some principal protected investments with some risk investments, but the theme is always I want to have cash flow. If I'm going to own stock, I want to get paid. That's another kind of ism that we have. I want to own stock. I want to get paid. And I want to sell my stock to get paid. So it's definitely, when you start thinking from this vernacular, it's a totally different paradigm than it is from somebody who a stockbroker saying, here, you got to own international, you got to own large cap, small cap. I could care less about that stuff, right? I care about protecting capital, maximizing cash flow.
Well, the light bulb moment for me today, David, was when you mentioned that spending is equivalent to losing in retirement. And perhaps that's what makes retirement so daunting, the possibility of both spending money in a market downturn, compounding on losses. But that's why, ladies and gentlemen, we need to engineer that retirement income blueprint. And if you'd like to do that with the assistance of the retirement architect himself, David Reyes, founder of Reyes Financial Architecture, pick up the phone and give a call, 858-597-1966. That's 858-597-1966. Or you can visit online, reyesplan.com. That's REYES plan.com, reyesplan.com. Get that retirement income blueprint to provide for confidence, regardless of market direction, turbulence, and volatility into the future. That retirement blueprint for income that David Reyes, the retirement architect, can help you construct and engineer. 858-597-1966. That's 858-597-1966. David, always a pleasure to have you on the program, providing the guidance and perspective that you do.
Absolutely, Peter. So I appreciate the time, and I look forward to our next episode here.
Thank you for spending your time with us again this week. Get the most out of your retirement plan. Call 866-REYES-PLAN. That's 866-REYES-PLAN. 866-739-3775. Or visit ReyesPlan.com.
No information presented today should be acted upon without meeting with a qualified and licensed professional. Reyes Financial Architecture, Inc., RFA, is an SEC-registered investment advisory firm. Such registration does not imply a certain level of skill or training. For a copy of RFA's current form ADV-2A brochure that includes a description of services provided, fees charged, and other important information, call 858-597-1966 or go to adviserinfo.sec.gov. RFA also is a licensed insurance agency with the state of California. License number 0G66604. This show is provided for informational purposes only. Opinions expressed in the show reflect RFA views as of the date of the recording and are subject to change. Nothing should be construed as a comprehensive statement of the matters discussed, considered investment, financial, legal, or tax advice, or a recommendation to buy or sell any type of security, and no investment decision should be made based solely on any information provided. Any forward-looking statements or forecasts discussed are based on assumptions, and actual results can vary from any such statements. Some of the information provided has been obtained by third parties and believed to be reliable, but not guaranteed. Past performance is not an indication of future returns. With respect to any discussion about RFA investment strategies, there's no guarantee that they will be profitable or perform as described during the show. RFA or one or more of its employees may have a position in the securities discussed and may purchase or sell such securities from time to time. All investments in securities carry risk, including the risk of losing principal amount invested. Different types of investments involve varying degrees of risk. There can be no assurance that any specific investment or investment product will be profitable or suitable for a particular investor's financial situation or risk tolerance. Asset allocation and portfolio diversification cannot ensure or guarantee better performance and cannot eliminate the risk of investment losses. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing insurance company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Surrender charges apply to base contracts. Optional life income benefit riders are used to calculate lifetime income payments only and are not available for cash surrender or in a death benefit. Fees may apply. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. Rates and returns mentioned on this program are subject to change without notice.